Hi there, welcome to the support and resistance video. We're going to look at the question, what is support and resistance? We're going to see how support becomes resistance and vice versa. We're going to look at examples of the break of support and resistance, and then we're going to summarize the whole thing at the end of the video. So what is support and resistance? Peaks and valleys, obvious and not so obvious, highs and lows are all levels of support and resistance. Resistance is the technical term for a peak or a high in the market. Support is the technical term for a valley or a low in the market. Support and resistance levels are often obeyed by the market more than once, and this is what makes it so powerful. Support will turn into resistance and vice versa. Support is a floor that price bounces off. Price is supported from dropping any farther. Resistance is a ceiling that price rises to and then is forced back down. The market is resisting the rise of price. We will see major areas of support and resistance, and these are the main peaks and valleys. And then we'll have minor areas of support and resistance, and these are the zigzagging highs and lows in between these main areas of support and resistance. Here are some examples of support and resistance in a range-bound market. We've got a resistance level across the top. Price rises up and gets rejected off of that blue dashed line. You're going to notice that price rises up. The first example hits the line exactly. The second example, price rises through just a little bit and then comes back down. And then the third attempt at that level, it doesn't quite get there, but is rejected all the same. This is an area. This general area provides resistance, and the same goes with support across the bottom. We get the first low, bounces right off of the line. The second low almost makes it to the line. It's a little bit above, and then the third low sneaks just underneath, but then gets rejected the same way. Support and resistance is areas and not exact prices, and this really is an important note. Here are a couple of examples of major and minor areas of support and resistance. We're looking at the major support at the very bottom of the chart. We're looking at the major resistance at the top. We can see that price comes down and is quite aggressively rejected from this level, and it meanders its way up and then is quite aggressively rejected from that swing high. Now, as it meanders its way up, it zigzags its way up from the support to the resistance. It makes this zigzag pattern. And the highs and the lows made during this zigzag are minor areas of resistance, minor areas of support. And we can see them laid out by the dashed lines. An uptrend, price will continually break through resistance and use those previous levels of resistance as support. In a downtrend, price will continually break through support and then use those previous levels as support as resistance. Range is an area that price bounces back and forth between defined levels of support and resistance. The market will just move sideways between a very defined high and low. An upwards trend line is support at an upward angle. And as the price zigzags its way upwards, you'll be able to draw a line that connects the bottoms, and this line will be at an upward angle. And in a downtrend, price will zigzag its way down, and across the top, you'll be able to connect the highs as they get lower and lower, and this becomes a downward trend line. Moving averages, they can provide dynamic support and resistance. Price will bounce off of certain moving averages as it follows price along. Support becomes resistance and vice versa. Support turns into resistance on this example. Price tends to bounce back off of support levels. If price breaks through, it will want to come back and test this level from underneath, using it as a new level of resistance. So in the example below, we can see that price used this blue line as support, bounced off the line in the first example, and then it breaks through, gets underneath the line, but then comes back to test that same level and is now using it as resistance and gets rejected off of that level. Resistance turns into support. If it works one way, it'll work the other way as well. If price breaks through an established level of resistance, it will want to come back and test this level from above, using it as a new level of support. So the first peak you see uses the blue line as resistance, price gets rejected, and then eventually price does break through the resistance level, but then comes back down and tests that level as support and reacts off of that level, and price gets rejected. Now, although support and resistance levels are great at holding price at bay, there are often circumstances when price breaks through these levels, and that is the break of support and resistance levels. Support and resistance levels are important for two reasons. The first reason, price will have a tendency to bounce off levels of support and resistance. The second reason is if price can move beyond a level of support or resistance, it will want to keep moving. These two reasons make them good trading opportunities. And finally, we'll look at an example of a real live chart. We have three lines, and they are areas of strong support and resistance. The blue arrows show you where price breaks through these levels, and the red arrows show you where price bounces off of these levels. And you can see where price bounces off, price wants to move for a little while. And when price breaks through, it also wants to continue for a little while. You can see how many really nice trades there are based on these three levels of support and resistance. Well, thank you very much for watching the video, and we're going to see you in another video. Take care.